This is the Tesla 1 month overview reading for the month of January 2024. It's currently November 23rd, 2023, 8:25 p.m. Eastern Time. Tesla in extended hours is currently $233.70 at the time of this reading. And the shuffle video we're about to play for you for the January reading was created on October 25th, 2023 at 9:12 p.m. Eastern Time. That's this video here in the corner. So the overall theme and behavior for Tesla in the month of January is going to be, it looks pretty mixed, guys. We've got overall theme would be revisiting a support level that we recently met once before. And there's two ways that plays out on a 1 month theme. Either we see the same support level more than once in the same month, in the month of January, or we're revisiting a support level from the previous month. It looks to me like in this case we're probably revisiting the same support within the month of January. It's crossed with an important support level, or excuse me, an important resistance level that it's highlighted, and we've met it many times before and failed to break through it. It'll be highlighted throughout at some point throughout the month. And then behavior on the high side, we have the change card. So sideways fluidity, equal amounts of bulls and bears, inflow and outflow. So we probably have some price swings, and we likely see the high more than once. Probably see the high twice, at least twice. And then behavior around the lowest low, we have a new high within close time proximity to the lowest lows of the month. So by new high, I mean like on like a multi-day scale, not necessarily like for like all-time high or something like that. But there is some probability of a highest high or first highest high for the month of January, or for the year of 2024 here in January, based on the 1 month. Now we have the abundance card here. I'll talk about that in more detail in the paid version. Also looks like the highs and the lows are within close time proximity to each other. Before we go any further, though, I want to make sure everybody's aware the whole purpose of the channel is to transmute some of the competitive energy of the stock market into goodwill. You do that by following the rule of karma for the channel, which is the unwritten agreement between the universe and people utilizing this information for profit. As long as you follow through on the rule of karma, the universe will allow you to continue profiting from this information, but you must follow through. The universe is expecting this of you. So when you have a profitable trade utilizing this information, make sure to go to the resources tab of our website, Tarot for Traders, and donate 5% of the profits forward to one of these charities. Just click on a link here and donate. It's super easy. And then 5% of the profit should be donated back to the channel. Say thank you and support the channel through one of the links here. If you're international, you can use Wise, or you can use YouTube's tipping capabilities as well. That leaves you at 90% of the money. Make sure to spend that money out of love. As long as you follow those rules, my friends, you follow the rule of karma for the channel, the universe considers you an angel investor, and it's going to send it back to you tenfold through the channel. Neglect to follow through, and the universe will shut off the flow of abundance through this channel very, very quickly, my friends. All right, so it's important to understand that each card represents 1 day of time, but not each card's energy is going to line up perfectly with 1 day of time. So you have to give it like plus or minus a day of wiggle room. In a lot of cases, you'll find that it's 100% accurate as far as timing. In some cases, you need to give it plus or minus wiggle room, a day of wiggle room. But in either type of scenario, the second of which is much less likely, but in either scenario, what you want to do is you want to make sure you follow the sequence of events of chart behavior, because that will keep you on track even when we veer off a little bit, like plus or minus a day on timing. We usually come back when we veer off. We usually find ourselves back on timing eventually. And so here on it looks like on the first, or the prior day, the last day of the prior month, or the last day of the prior year, I should say, it looks like we probably gap up, and then we have erratic behavior. There's like a peak on the second that's revisited that we recently met once before, and there's erratic behavior back and forth there through the same price level and a trade opportunity I'll talk about in more detail in the paid version. On the third, we have a trough early in the day. It's a prominent trough on a 1 month scale, and there's a sideways fluctuating rally out of that trough. That rally does proceed a decline, which takes place on the fourth. A notable decline on the fourth, and another trade opportunity I'll talk about in more detail in the paid version. On the fifth, we do sideways crisscrossing back and forth through the same price level, first to the upside, then to the downside, and then back up. Usually we confirm a bullish trend in that sort of scenario, and then we have price swings on the second. It's interesting. It's a very similar energy to the fifth. So probably like whatever kind of swinging was going on, whatever price swings are going on here on the eighth, they probably started here on the fifth. We end up in a prominent high at the end of the day with a big move to the upside right there at the end of the day on the eighth, or on the cusp of the eighth, ninth. And then on the ninth, we have a failed attempt to break through key resistance and a notable decline through key support. Another prominent trough, either on the 10th or the 11th. Hard to say, but let's go with the 10th. There's a move higher out of that trough to a peak at the end of the day, and then we've declined with like a full retracement of that move back down into the 11th, or on the 11th into another prominent trough for the month on the cusp of the 11th, 12th. On the 12th, however, out of that trough, we have a big move higher, breakout on a multi-day scale, and we meet a prominent crest there, peak or crest there midday on the 12th. And let's take a look at our Tesla reading for November and see how we're doing thus far. I don't think this was one of our best ones. This might have been our second worst one thus far that we've taken a look at. And it's still not horrible. It's just like we had a difficult time determining the lowest lows. There's indications of one around the 8th, 9th. We sort of got that, but really the lowest low is here first thing in the first day of the month. In a lot of readings, we kind of had it for the third rather than the first, ended up being the first. So something was throwing us off there. But in any case, we were pretty close as far as lowest lows go for most of the readings. Here we have a trough that stands out. We also have a prominent peak on the 6th. You can see that prominent peak on the 6th, a prominent peak on the 8th. You can see that prominent peak on the 8th. A decline on the 9th that offers an opportunity to open up a long position. And then you can see the following day with the trade opportunity there, you would have been able to close that long position in the midst of a rally that increases with momentum moving forward in time. And that would have been one of the trades we talked about in the paid version that would have paid off very profitably. Or if you held it until the 13th, which would have probably been recommended as well, would have been an even bigger gain. Or the 14th, you can see how there's this big move on the 13th, right, the star card, and then we have an even bigger move reaching for distant resistance there on the 14th, and you can see what I mean by reaching for distant resistance. What's also interesting is I've just learned something about these ruins. And the way these ruins are set up, it was kind of telling me there would be a gap there, and I kind of missed that. But now I'll notice that moving forward. That's interesting. Thank you to my guys for that extra bit of information. On the 15th, we have a peak, a near overbought peak that we sell off from pretty notably through multiple supports. I mean, this is really accurate. Aside from us missing the lowest low by a couple days, we have a highest high predicted for, well, probably our highest high thus far on the 28th. No, excuse me, probably our highest high thus far on the 29th, a higher high on the 28th, and then maybe even a higher one there on the 29th or the 30th. But this is looking pretty solid. Aside from us having difficulty pinpointing exactly where the lowest low was, we were close. Everything else seems to be pretty on point. And let's get back into it. We probably opened lower on the 16th than where we closed on the 12th. In either case, there's a notable decline. There's like a failed attempt to break the key resistance on the 16th, probably early in the day, followed by decline through key support, taking us to another prominent trough for the month, and another prominent trough early in the morning on the 17th, and a period of volatility, a sharp drop that stands out in that period of volatility, taking us to that trough early in the day. And then on the 18th, another trade opportunity, we'll talk about it in the paid version, with sideways rotation, and then a fast sudden move higher that stands out in that period of sideways rotation. Likely open lower on the 19th. Either that or there's a decline at the end of the day on the 18th or early in the day on the 19th. Either that or a gap down on the 19th. But in either case, that decline or gap down, we end up moving higher from the bottom of range all the way to the top of range. Usually a pretty big move there. There's a speaker there. I think that move to the upper end of a range probably continues over the weekend into the 22nd. And then there's a prominent peak on the 22nd. A lot of price change there, allowing, or with the resistance level that's highlighted, allowing for trading in both directions, which I'll explain in more detail in the paid version. On the 23rd, another prominent trough with a U-shaped dip, and then another peak on the cusp of the 23rd, 24th. A lot of price change and volatility on the 24th. On the 25th, there's an important price level highlighted it's important on like a 1-year chart minimum scale. And then sideways rotation on the 26th. A lot of price change on the 29th, a big move on the 29th, and an opportunity that'll stand out as a really, like a prominent opportunity, or a really auspicious opportunity on a multi-day scale when it'll stand out amongst other opportunities that we talk about on a multi-day scale throughout the year. It's also cross-reading congruency. I'll talk about in more detail in the paid version, but very likely a prominent peak there, and a trade opportunity, and then we decline from that peak into the 30th, with increasing with momentum as we move forward into the day, and then on the 31st we rally. Out of that decline, we rally on the 31st along a diagonal trend line. That diagonal trend line ends with a fast sudden move higher, and then a breakdown through that diagonal trend line with increasing volatility on the way down. The sneak preview for February is a period of volatility, and a fast sudden move higher that ends that period of volatility. Also very likely another prominent peak on the 31st towards the end of the day. In any case, that's Tesla for January 2024, my friends. Let me know what you think by hitting that like button. Don't forget to subscribe if you haven't done so. It really helps out the channel. Most importantly, make sure to follow that rule of karma. It's important, guys. If you plan to profit from this information, you must follow through. You know where to go, to the resources tab of our website. You know what to do. Blessings to all my angel investors. I'll see you guys on the next one. Stay tuned if you got the paid version. All right, guys. So as far as highs go, most likely location, it's pretty mixed, guys, but the most likely location of the highest high, we may have like a high side that's far here around like the first, second. Most likely location of the highest high is going to be here on the 8th, 9th. And it's possible that we see it again here towards the end of the month. Like, there's the highs and the lows look like they're really close to each other, which would make sense when we look at the January cluster. We've got the price swings near the lows, and also the abundance card indicating probably like a new high or really important high on a multi-year scale. When we look at the multi-year, we've got price swings here. That's important. There's possibly like a prominent peak here in 2024 as well. But it looks like the high is actually towards the end of the month. So we do some mixed behavior. We probably see the lowest low more than once, maybe 3 times. Like the 10th, 11th is very likely a lowest low somewhere around the 10th, 11th. And then if we do revisit it, it's very likely going to be, I think we see it another 2 times on the 16th, 17th, and then on the 23rd, or 22nd, 23rd-ish. It's hard to say exactly, guys, because it's really mixed, but I think that's probably where the 3 lowest lows are. And it's like a lowest low thus far somewhere around the 3rd. Highest highs, probably the 8th, 9th, and then it's very likely that we end up in like higher ones. We probably see the same highs again around the 22nd, 23rd. Like I said, there's highs and lows within close time proximity to each other. If it's not the 22nd, 23rd, there's possibility of it around this science card, but even more probability of a highest price level here as we enter into like the last 3 days, either the 29th or on the 31st, probably a highest price level for the month total. And I think the 8th, 9th, and the 2nd, or the 22nd, 23rd-ish, probably are the same price levels and act as highest highs until we get to that last week, that last 3 days. And we're probably revisiting highest highs on like a multi-year chart, right? When we look at the 2023, actually, let's look at the multi-year, right? So we're in the midst of the price swings now, and that's very much the energy of 2024. So I think we'll probably see higher price levels. We might see the same highs. Like there's a trade opportunity in 2025. All right, so I would say in January, we probably see our highest high since the lows made in early 2023. We probably see our highest highs, if not the same highs. So it's probably going to be our highest highs since the lows of early 2023. And then we may go into the same high or higher in 2025. It looks like, based on that. Maybe at the end of the year, we go into like our highest price level because we've got the we push the upper end of a range higher, and then we've got highs there. Okay, so this is going to act as like probably our highest high around here. This 29th, probably 29th or 31st will act as our highest high for the year thus far, and probably like our highest high since, like I said, that low of early 2023. So that would put us above the high. The high of 2024 will be above the $300 a share mark. well, the January high of 2024 will be. And we might even go higher, but I'd say that's like the minimum, higher than 300. As far as the best trades, so on the second, in the midst of that erratic behavior, there's a crest that we revisit that we recently met once before, so towards the end of December. Either like the peak, the brief peak from the 29th, then move higher in that full retracement on the 27th, which was probably a high, because it looks like we go higher in January, right? So in any case, I would open up a short position at that crest that we revisit and close that short position on the 4th. So we'll have a trough on the 3rd. You could sell there the very next day if you wanted to. That's probably where I would do the very next day, at like a month's slow. And if it didn't look like a good day to do it, then the 4th probably works too, but I would probably get out early at a trough on the 3rd. You could also, in the midst of a decline on the 4th, you could open up a long position, close that long position towards the end of the day on the 8th or on the cusp of the 9th when we have this big move at the end of the day, pushing the upper end of the range, or excuse me, this big move at the end of the day, taking us to a high side for the month. I would close out of that long there. It'll be a failed attempt to break through key resistance, and then there'll be a decline through key support back into lows. And there's going to be price swings here as well, which makes me think that we see a low and a high here because it's a cross-trading congruency. So I think we go from low to high back to low. Just like here, we go from like possibly from a high to a low to a high or something. There's like price swinging going on. At that high on the 9th, you could open up a short, and then I'd say close that short at like a significant low on the 10th, or even a lowest low there on the 10th, 11th. But it might get a little tricky. So as soon as you have an opportunity to close that short, I would do so. So I think that's probably, it's like a resistance level highlighted here around the 8th, 9th at that highest high, and that's that cruelty resistance. So I think it's highlighted there, and then we see that cruelty resistance is highlighted here around the 9th, 8th, 9th, and then we see it again around the 22nd. We may actually break out through that resistance on the 12th, but it doesn't hold. Like over the weekend we come back down, or on the 16th we come back down, and those will be prominent lows, not necessarily lowest lows, but they'll be prominent lows. They could be lowest lows, but if they are, they're probably the same lows as the 10th. And then on the 23rd, oh, also, excuse me, so trough at the end of the day on the 16th, you could open up a long position, and you could close that long position probably at the end of the day on the 18th when we have a big move higher, ending a period of sideways rotation. If I'm wrong about closing it on the 18th, you could probably close it on the 22nd, like early to midday at a key resistance, probably the same high as we had on the 8th, 9th. Opening up a short position there as well to close on the 23rd, or at the end of the day on the 22nd maybe, because there's day trade opportunity there. Wherever I close that short position, you could open up a long again and then close that long at another peak on the cusp of the 23rd, 24th. If I'm wrong about closing it there, you could close it on the 25th. If I'm wrong about that, you could close it on the 29th. Pretty good trades there, pretty solid looking trade. Going into February, I would likely want to be in a long position going into February to close at a highest high for the year. Probably the same high that we had in January, but if not, it'll be higher, and it's there towards the end of the month of February. I would look to close out of that for a multi-day swing, and I would open up that long position. I'd put on a partial here around the 16th, 17th trough, and then I'd add to that on the 23rd. And then as far as performance against the S&P 500, my sense is that the S&P 500 outperforms Tesla in the month of January pretty notably. And that's Tesla for January 2024. Thank you so much for supporting the channel with the paid version. Love you guys. Blessings. Have a great year, guys. Have a great start to the year. And you know what to do. You know where to go. Blessings to all my angel investors. I'll see you guys on the next one.